Thank you, guys. I am with the Westlake Financial Wellbeing Center, and we are getting ready to get started. You couldn't hear anything because I wasn't saying anything earlier, but thank you for letting me know. And before we get started, I just want to give you some housekeeping rules and provide some information about the Westlake Financial Wellbeing Center for those of you who do not know what we do. And again, my name is Denise Small, and thank you so much for joining us this evening, for spending your time with us. We appreciate, because we know you could be doing anything else. So, and taxes are so much fun. So I know you are just dying to hear so much about it, but I'm glad that you're spending this time with us. So just to give you a few housekeeping rules. Everyone is currently muted. Your video is turned off and the webinar is being recorded. In addition, if you have questions, please use that Q&A feature. We love that feature, or I love that feature actually. And so it's easier to make sure that we answer all the questions. The questions will be answered at the end of the presentation. However, feel free to put in your questions as the presenters are providing information, because we want to make sure that they answer your questions and that you can get all the information that you came here to receive. So please, as they go along and something comes up and you think about it, please go ahead and put that the question in the Q&A feature. Once the guest speakers are finished, there will be a post test. So I will put that post test link in the chat box, and all you have to do is click on that post test link. Please, please, please click on that for us. Once we get all of the post tests, then we will have a raffle. We're giving away gift cards tonight, $25 gift cards. So please, if you put in your post test, then you'll be entered into that raffle. So once all the post test assessments are received, then we will have that raffle. And the post test, by the way, is the same thing that you already filled out when you registered for this webinar. So it's those questions, but our wonderful speakers will now provide the answers in this webinar to all of those questions, plus any other questions that you have. And we just want to let you know that we do collect and maintain your registration information. And we don't give it to anybody else or sell it or provide it to anyone else. We just use it so that we can inform you about what's happening with the Westlake Financial Wellbeing Center. And then just want to tell you a little bit about us. For those of you who don't know, we are located in the 32805 zip code. And what we do is we provide all things finance, basically. So we have webinars we try to do them like every 2 weeks. And they different types of financial webinars. So they could be about credit reports, they could be about credit cards, about housing, about how to buy a house, about loans, about car loans, about taxes, about shopping, budgeting, spending plans. So we do a lot of different ones. And if you have a webinar that you would like us to do, we are open to that information as well. We also do virtual financial counseling. So all these services, by the way, are free to the community in 32805. So that virtual financial counseling, what that looks like is you sit down with a coach, that would be me, by the way, and we will sit down and talk about, we do it on Zoom or on the telephone, and we talk about your financial goals. What are they, and what would you like to achieve? And then we also help with job placement. We have resources, career resources, community resources. And so the way to contact us is there on the screen. And if you can't see it, it's the telephone number is 407-250-6257, or you can send us an email. So we are always available to help you in terms of anything finance. And then we also try to help with other community resources. So that is us, the Financial Wellbeing Center. Again, we are so happy that you are here with us this evening. And I am going to turn it over to our speakers. They are Jalen Rose and Megan Bradford, and they are both from United Way. And please have lots and lots of questions about taxes so you can get all the information that you want. This is a different tax season than it has been in the past. So please feel free to ask all of your questions. And Jalen and Megan, they are superstars, so they are going to be able to answer everything that you have. Right, guys? No, yeah.
As best as we can.
So I'm gonna turn it. I'm gonna turn it over to them, and I just want to thank them for being here this evening with us.
Thank you. Can I share my screen right now, Denise?
You sure can.
Okay. Okay, can everybody see the screen?
Okay,
I can't really
let's
see the
rock
chat.
and roll. I can see it. I can see the screen, so we should be good. My name is Megan. This is my confrere, Jalen. We're here from Heart of Florida, a United Way, and we're going to talk to you tonight about taxes, which we know is a really sexy subject, but it's more fun because hopefully you'll be getting some money back. So we're going to talk to you tonight about the tax programs, the different credits available, who you can claim, and just a bunch of in-depth information. If you do have questions, go ahead and use the Q&A, and hopefully we'll get to them. Jalen and myself are public allies. We are not tax accountants, certified tax accountants. So we're going to do our best to answer all your questions with our knowledge, but we can't give you any specific tax advice. Next slide. So as we said, we are here from Heart of Florida United Way, which is a nonprofit that services Orange, Seminole, and Osceola County. United Way fights for the education, health, and financial stability of every person in Central Florida. Next slide. We are from the Financial Stability Department, and what that means is basically our department stands to fill in the gaps for community needs and strengthen the financial stability in the community. And may that be through enhancing education, healthier lifestyles, job opportunities. The goal of the Financial Stability Department is to do financial initiatives in the community that's going to invent everyone in Central Florida. Next slide. So we are working on the program called VITA. VITA is a volunteer income tax assistance program. It is a free program. Next slide. It is a free tax preparation service run by certified volunteers. So these volunteers are IRS certified to prepare your taxes. They do it for free at no cost to you. You can get your taxes done at a VITA location, again, free, no catch, in all three counties, Orange, Osceola, Seminole County. The only requirement is that you earn moderate income or less, which means your maximum income has to be under $66,000 in order to have a certified tax assistant prepare your taxes on your behalf. Or if you're a senior citizen, disabled, or have English as a second language. So those are some of the qualifications to be able to utilize the VITA program. Next slide. Last year, VITA did over 4,000 accepted tax returns. They have a high acceptance rate. Over 14,000 families were helped in Central Florida through the VITA program, and over $7 million were funded to Central Florida. So that's a lot of money back in refunds. And one of the ways that we help with the VITA program is to qualify and make sure that people are receiving all of the credits that they may qualify for. Next slide. Oh, sorry, I'm getting a little ahead of myself. So what do you need to bring at the VITA sites? So in order to get your taxes prepared at a VITA location, you just need a few things. One of the first thing is your photo ID and your copy of your last tax returns, if that's available. Social Security card for all of the taxpayers. So yourself, your children, your spouse, if you have one, all of the people who are qualified under your taxes, you need to bring the copy of the Social Security number for them. And then a W-2. A W-2 is called it's your wage statements. If you had a couple different jobs or 1099 forms, any type of statements that you're going to be receiving regarding your wages, you're going to want to bring that to your VITA appointment, as well as your bank account, so that you can get your check refunded in direct deposit. And then the last form is the 1095 A, B, and C healthcare coverage statement, which you should receive in the mail. Next slide. Okay, so I'm going to pass it over to Jalen. He's going to talk to you about one of our favorite credits that most people qualify for, the Earned Income Tax Credit. Go ahead, Jalen.
Yeah, thank you, Megan. Thank you. So all I see is the big PowerPoint. So let me know if you can't hear me. Just let me know, Megan, or let me know, Denise, if you can't hear me or anything like that.
Gotcha.
But Earned Income Tax Credit is exactly that, a credit at no cost to you based on qualifications met for certain individuals or families. So let's talk a little bit more about what those qualifications are, right? So the qualifications are you must have at least $1 of earned income. Now this includes self-employment. So if you worked any time in the past year, in the year of 2020, almost said 2020 for 2021, but in the year 2020, if you received any type of income where you basically earned it or worked for it, this does not include unemployment or pensions or anything such as that, but it does include self-employment. So if you had a business, if you exchange money or receive money for any type of work services, any type of way, you've already hit one of the qualifications for earned income credit. Now, you must have a Social Security number, be between the ages of 25 to 65, and you do not need investment income. But if you do have investment income, then it must be less than $3,650, right? So the max credit amount that you can get is dependent on how many children that you have or may not have. So it's anywhere from 538 with no qualifying children up to north of 6,600 for 3 or more qualifying children. Now, with that being said, there is an income limit as how much the individual or the family will make. I want to say before I go through all of them, or a gist of all of them, is that married filing jointly is a combined income, single is individual income. So even though married filing jointly is slightly higher, as you see on the list, it is combined. Now, if single, it can be anywhere from $15,820 for the income limit with no qualifying children, up to $50,954 with 3 or more qualifying children. If married filing jointly, then the minimum could be $21,710, up to $56,844 for 3 or more qualifying children. Now, the main thing is that since this is at no cost to you, it never hurts to at least see if you qualify and at least do that. You don't lose any sleep by trying to go ahead and see if you qualify for this. Now, I'm going to talk a little bit about the economic impact payment. If this is the first time you've heard of this statement, this is more of a tax term, and you may be more familiar with stimulus payment or the stimulus check. So the economic impact payment, the CARES Act basically authorized payments of $1,200 to eligible individuals, plus $500 per qualifying child. If it was married, then it was up to $2,400 who filed a joint return, plus $500 per child. And then the second payment, which came not too long ago, or released not too long ago, was the $600 to eligible individuals, plus $600 per qualifying child. This is known as the stimulus payment. Tax term, like I said, tends to be economic impact payment. So if you ever hear that, then know that they're actually referring to the stimulus check or payment. Now, there are ways to see if you have received that. First, let's talk about some qualifications. My apology. So in order to qualify for the stimulus, you do have to be a U.S. citizen or resident alien, have a work eligible Social Security number, and you cannot be claimed as a dependent on someone else's tax returns. I'll talk about slightly very soon how you can kind of check to see if you do qualify. So we'll get there really soon. But if you're wondering if you received your EIP or stimulus check, not bank deposit, if you have any bank statements or receive form 1444 or the letter from the White House regarding the stimulus payment,
So
then
what
these are
did you
ways
say
you can
form
kind of
was?
form 1444 1444. That's a tongue twister for me. 1444. Thank you. And I'll show you an example of it actually of what it looks like, the both forms. So right here on the EIP examples, as you see, the White House, Washington, this is a letter that you could have received in the mail. There's also another type of form, which is the actual form itself that you could have received saying that you may need to claim your payment under the CARES Act. Now, if you already received this, then when you file your taxes and everything like that, they'll ask you a question and you'll basically just say you've received it if you know that you received it or not, right? If you do not know that you received it, I'm going to leave this up there for a second, but we can circle back if necessary. This is a QR code to the irs.gov website, a section called Get My Payment. This section right here, as long as you have your social security number or tax number and your date of birth and street address, then the government basically lets you know if you've received one payment, two payments, no payments at all. So this is a great resource to use if you can get around some internet and a computer to go ahead and see if you receive your payment, if all else fails and you cannot figure out if you received the payment. Now, if you cannot do that either and you just are not sure and just really know that I'll say really know that you did not receive it, just make sure that you are sure that you did not receive it and say that so that you can qualify for the recovery rebate credit, which I'll talk about very soon as well. Oh, right there. So recovery rebate credit is for individuals who've missed the economic stimulus payment. So whether you missed all, if you missed a portion of it or the second one, then you can still qualify for the recovery rebate credit. So you don't receive it, then you receive this credit when you file your taxes. The amount is equal to the economic impact payment or the stimulus payment that was sent out. And you cannot receive both the recovery rebate and the economic impact payment or the stimulus. So if you have received your stimulus payments or stimulus checks, then you cannot qualify for this recovery rebate. It is strictly for people who have not received the stimulus and qualify for it as well. So I'm going to pass it back over to Megan to talk a little bit about filing status.
Okay, so this past year has been a really, next slide, please.
Yep.
This past year has been a really interesting year because the government did something it hasn't done before, which gave us all a bunch of free money that we needed. And a lot of people qualified for it, but didn't exactly get their money in a timely manner because they didn't file their taxes. And as hopefully we all know by now, it's really important to file your taxes because it's required by law. And there's a lot of penalties, but there are certain people who must file taxes. And so here we have on the slide, if you're single and you're under 65 and you make more than $12,400, you are required to file taxes. So you might be thinking, well, if I only make $11,000, I don't need to file taxes. I'm going to get there because you might want to file your taxes. If you're married filing jointly and you make over $24,000, you need to file taxes. If you're married and you're filing separately and make more than $5, you need to file your taxes. Very interesting. Head of household is over $18,000. So we have here, you can take a look at this and think, look at where you fall into and answer that question. If you make more than that amount on the screen, then you are required by law, which means there is penalties if you don't file your taxes. But if you don't make that amount of money, you're technically free not to file. But here we're telling you to file your taxes, and I'm going to get to exactly why on the next screen. Go ahead. So who should file? If you had income taxes withheld from your paycheck, even if you make less than the amount of money on the screen, you should file to get that money back. You could qualify for earned income tax credit, the EITC. You could qualify for the American Opportunity Credit. You could qualify for a premium tax opportunity credit or recovery rebate. So there's all of these beautiful credits, which a credit is a nice word for money back in your pocket. That is good for you to file taxes, even if you are not required by law to file taxes. So some people on the previous slide are required, must, and some other people who are not required still should. So it's always best practices, no matter where you stand in the income level, is to file your taxes. It will help you, not hurt you. Okay, I'm moving right along.
Yeah, and I'll say real quick, just to reemphasize earned income credit, if you made $1 for the whole year, then you could potentially qualify for earned income credit. So something to think about as well.
Okay, so what is a filing status? So this is your filing status determines how you are taxed. A married filing jointly and married filing separately. There are little to no benefits, tax benefits for married filing separately. A lot of the credits that you could receive if you're married and you decide to file separately, you lose a lot of those. It's almost worse off than being a single person. People usually do this for reasons of keeping their finances very separate. And for that reason, there's not a lot of tax credits that will apply to the married filing separately category. Married filing jointly is very self-explanatory. You and your spouse file your taxes together as one big happy package. A qualifying widower is someone whose spouse has passed in the year previous, not the current tax year. So we are currently in 2021, but will be filing taxes of 2020. So if your spouse has passed in 2020, you would still be filing jointly for the previous year. But if they had passed in prior years where taxes already been done, you'd be a qualified widower. A single person is a person with zero dependents. And we're going to talk about what dependents look like in just a moment. And then head of household is a person who is responsible for taking care of another person by 50% or more of their needs for at least more than 6 months of the year. Okay, so head of household means you are responsible for other people with your income. Single means no other persons and unmarried. Okay, next slide. So overviews for claiming a dependent. So some of the rules with claiming a dependent is the person has to be related to you in some shape or form. So if it is a child, they have to be your son, daughter, stepchild, foster child, brother, sister, half brother, half sister, stepsister, step cousin, descendant, or adopted child. Okay, so there has to be some type of relationship. We're not supposed to claim our neighbor's kids because they have 5 kids and it will help you in any way. That's not how the IRS wants us to do that. So there is a relationship test that we do on dependents. How is this person related to you? And did you provide more than half their care for at least for more than half the year? The other question is, do they live with you? Children need to live in the house where they're being claimed. The test for a qualifying relative is the person can't be your child because they would be your child dependent, not your relative. It's the main question is, did you provide more than half of their income? And the relatives, it's very important, they don't have to live with you, but you do just have to provide more than half of their financial needs. So we're going to go to the next slide. Now for people who have been separated and their share responsibility with a previous significant other, and and you're wondering who claims the taxes of that child, there's a couple things that can be agreed upon in your divorce or separation agreement or child arrangement agreement. But this is also important, just to note that if there's ever a disagreement on outside of any written word, who gets to claim a child dependent? By the IRS, it is the person with the highest gross income that gets to claim the dependent. So if there is a child and person A makes 60,000 and person B makes 40,000, and they can't agree on who is going to claim, and they both claim the child at the same time, the IRS is going to accept the person with the highest AGI as the rightful person to make that their dependent. Okay, unless it was a fraudulent situation where someone wasn't supposed to claim, but if both people are equal providers for the child and they can't work it amongst themselves, the IRS will go with the person with the highest income as the ability to claim that child. Next slide. Okay, so here we have just a few steps to check if this person is someone you are allowed to claim. I kind of touched on it on the previous slide, so I won't linger here too long. But the main part is who does the child reside with, and who provides the majority of the child's financial needs. So if the child lives with you, it is your child or stepchild, etc., family member. Then you have the right to claim that as your dependent for that tax year. Next slide. And qualifying relative dependents. For this, the main point is that you can claim your aunts, your uncles, your moms, dad, cousins, family members, any family members who you might be supporting. They don't need to live with you. It's just that if you've provided support for this person, and for a relative, it only needs to be 10% of the person's total support. So it's if you help pay a family member's insurance, and that insurance bill is at least 10% of their bill, of their total expenses, and you help them with that, you get a tax benefit for that. So that's kind of helpful. If you have family members who you're consistently helping each month, you get a tax benefit for that. Next slide. Okay, this is kind of my favorite benefits of taxes, is the education credits. So in our country, there is a lot of benefits for going back to school. So maybe there's some people here who want to go to school, get a bachelor's degree, or maybe you have children and you want them to go get a degree. There is a lot of tax benefits for people to go back to school. The best tax benefit we have is the American Opportunity Credit. So what this is a credit of $2,500 per a student. 40% of this is refundable. So what that means is up to $1,000 of the credit can be cash back in your pocket. It has a limit of $4,000 in education expenses. So if you pay for college, your income, your gross income can be reduced by $4,000 for tax reasons. So if you make $20,000, you went to school, the American Opportunity would then adjust your taxable income from $20,000 to $16,000. And then you're going to get the credit, which is partially refundable. So that's one benefit. That is good for 4 years up until the bachelor's degree is completed. And it is good one time per a student. The other credit that we have is the Lifetime Learner Credit. This credit reduces the amount of taxes that you pay. So again, it adjusts your income. It's a $2,000 credit per tax return, and again, limits how much you pay in taxes. There's other ways that these educations benefit you is the tuitions and fees deduction that reduces your income again by $4,000 through that benefit. And then also, if you happen to pay student loans from going to school, there's $2,500 deduction per a student for student loan interest. Now, a lot of income that you might make is taxable, but ways that you finance your education are not taxable. So next slide. So education assistance is tax free. So that's really important. And with the other taxes, any expenses that you pay for things to go to school for yourself or for your dependents, those things reduce your taxable income. So you're not going to pay taxes on any scholarships or fellowships that you receive. The Pell Grant is a grant provided by the federal government to help people who make under certain amounts of money go to school. It's up to about $6,000 a year, and that can afford community college and pay for university as well. So if you make under a certain amount of money, you could qualify for the Pell Grant, or your students could qualify for the Pell Grant, and that money that you're receiving that pays for school is not taxable. So it's not something you have to worry about paying back or paying taxes on, which is really beneficial. If you work at a job and you get benefits to go to school, you don't have to pay taxes. Now, if you win a car tomorrow, you're going to pay taxes on that car that you just won. But any free money that you get for school is tax-free. So that's a really big benefit. Now, the one thing I'd want to mention is if you are married filing separately, you cannot claim any of the tax education credits. So that's kind of a sticky situation. With married filing separately, it does not qualify for a lot of the credits, but all of the other filing statuses do. So I just wanted to point that out. Next slide. And I'm going to pass it back to Jalen to tell you about additional resources.
Thank you, Megan, and great information. Yup. So additional resources I want to talk about real quick is My Free Taxes. Now, this is a website, www.myfreetaxes.com, where you can file your taxes from the comfort of your home for free. Yes, for free. This particular year, there is no income limit on that website. There is a questionnaire. If you see on the screen, this is an example of what the website looks like when you log on. You just answer a few questionnaires, including whether you want to do it by yourself with assistance or not sure. And then they kind of link you to different resources and help you provide those resources to get your taxes done for free. So it's not too bad to do. I've checked it out before. It's pretty straightforward and definitely a great resource to take advantage of free of charge, right? And so my money
Really quick,
is
I just
yes.
want to tell you about the My Free Taxes. I've used it myself. It's super easy if you've done any online applications before. It's user friendly. So I just wanted to point that out. If you can fill out your basic information, name, personal, all of your personal information, you'll be able to navigate My Free Taxes.
Yeah, thank you. So we also have the My Money texting platform. And so basically what this is a messaging kind of communications thing that gives you tips on financial stability and to kind of empower you to be a little more financially stable. So tips to help you earn well, save more, and spend less. Particularly right now, as you can see in the example, a lot of tax credit information coming out weekly on a Wednesday at 12 p at noon. A lot of tax information coming out because we're heavy in the tax season, but you also get information on budget, on spending, on a whole lot of different financial advice that is completely free. All you have to do to subscribe is text My Money to 898-211. Standard messaging rates do apply, but a great resource to utilize just to get a quick bit of information, a quick link to click on it to learn a little bit more. So if you do have a chance, I do recommend taking advantage of that. Now, a big resource that we have is the 211 phone, email, chat, or text as well line. So this is free and completely confidential assistance 24/7 for any type of crisis support. Food and housing assistance, support services, health, wellness, mental health, you name it. 211 tries to connect you to the best resource possible in the area in order to better support you and better empower you. A big thing with 211 as well, especially in tax season, is VITA. So this is a great number to contact to get some information about VITA, maybe learn about some VITA site locations, maybe even potentially get to a step closer to registering and getting your taxes done through the Volunteer Income Tax Assistant Program. So like I said, the contact is 211. You can do this by phone. You can do this by email, chat, or text. If it is text, just text your zip code to 898-211, and then you can take advantage of the 211 services. That's available for everyone. So this is our contact information right here. This is pretty much the close of the presentation. Right here on the map itself, it's a QR code, and that leads us to, I might say it wrong, so maybe you might have to correct me, but the VITA map on our financial stability site, correct? The VITA map?
Yes, so that's going to take you to the VITA landing page, and that's going to give you all the information about where you can get your taxes done for free near you. We do have a location on OBT, in the OBT area, but depending on where you are, what's convenient for you, you can take a picture of this, go to the VITA landing page and check out a place to get your taxes done for free.
Thank you. I'm gonna leave this up for a couple more seconds before I shut it down too. You can go ahead, Megan.
Okay, so now we're just gonna get to the questions and answers. So I see the question. How do you make sure you're taking advantage of all the credits or resources available when filing your own taxes? What is a good program to use? So when you're doing it yourself and you're going through the My Free Taxes, it asks you these very specific questions line by line. There are even credits for having a renewable resource car. So it asks you a question to see if something applies to you. And if the answer is yes, it's going to ask you for the information. If it's no, it's going to bring you to the next one. So it'll say, in 2020, were you a full-time student? And the IRS has no definition of what a full-time student is, but your university does. So for some colleges, that's 6 or more credits. For another college, it might be 9 or more credits, as an example. And so you will know, does this apply to me, yes or no? And so that's how it works in the My Free Tax program. So it depends on which resource you are using, but we recommend using this one because it's free and it is going to walk you through that. Now for Catherine, she asks, how do you get that missing part of your first stimulus check? Jalen, do you want to answer that?
How do you get the missing part of your first stimulus check? Okay, so that goes back to the recovery rebate credit. So if you did not receive your first stimulus check, basically, as the questionnaire goes, when you're doing taxes and stuff, there should be a question asking you about the recovery rebate, and particularly about the stimulus or economic impact payment and whether you received it or not. So if you did not receive the first stimulus check, you have a chance to receive it if you qualify. I dropped the slideshow down, but there's also a way to check if you're supposed to receive that payment and if it was sent to you through the IRS.gov website. There's a Get My Payment Info section. Let me see if I can actually pull it up really quick, just to show you the QR code to take. You can actually utilize that to go back. You can utilize that link right there directly to see if you had received it or not. So it should give you information if you should qualify for it as well. The IRS does have some good areas there to kind of look and see where you're at. Same thing, they do have a portal. Unfortunately, I didn't put it there, but they have a portal to check for earned income credit as well to see if you qualify for that, if you have your right documentation. So I'll leave this up here. Hopefully that answers your question a little bit, to go ahead and see if you received it or if you're supposed to receive your payment and what's the status of it.
And so I saw the question that was, I got it for myself, but not for my child. And so if for reasons you didn't if you didn't claim that child on a previous tax year, you may not have, you would not have gotten the payment. If someone else claimed them, they would have gotten the payment. But if nobody claimed that child, you will report this to the tax preparer, and they will submit how much money you received and how much you were supposed to receive in with your taxes. At our VITA locations, there's a specific screen that asks how much of your economic impact payment did you receive. And so that's just a step in filing taxes this year.
So I can see some of the questions. Okay. Any other questions? I know we're not that good. We're decent, but we're not that good.
Okay, I see the question. Did the EITC amounts reduce this year? What about kids in college? Okay, so from my understanding, I don't believe it was reduced.
Did the EITC amounts reduce this year? What about kids in college? Okay, so I'm not 100% sure about that question. That might be a question to go ahead and reach out to us or send to Denise, and we'll send it to Denise and she can send it back out, so to make sure we get that, because I'm not 100% sure about the amounts reducing this year. So I have a thought. I don't want to take a educated guess on that. I want to get you a hard set answer. Let's see. Megan, you looking right now?
Okay, so as long as your child is under age 24 and is a full-time student, that student does qualify for EITC. So I just looked that information up. Now, as far as the amounts reducing, the information we have doesn't show that there was a reduction in the EITC. I don't know. That's the answer I have for that. All I do know is what the current credits are, like potential credits. So if you think you received something different in the year, it may have. We just have current yearly credits. But your student does qualify if they're in college and under the age of 24 for EITC.
Okay, thank you, Denise. And Denise has confirmed that it actually has increased this year. So, and that was the question that was tripping me out, the amount for EITC. So it did increase. Thank you for that, Denise.
Oh, I see another Q&A. Let me just pull it up. Okay. Do we have any other questions for myself or Jalen? No. If married filing jointly and one person received the education credit, can the other person get it? Yes. Each individual student can receive the American Opportunity Credit for up to 4 years, which is really awesome credit. And it's not limited to like one per a tax portfolio. So if there are 5 people, 2 adults, 3 children, that credit is good for every single human in the family unit.
Okay, well, I see a question in the chat. Will United Way help with amended taxes?
That's a good question, and I don't know the answer if that's something that we can do. So that's something I will write down, and I will get back to Denise. I think it depends on the site location and what they're able to do. So I will get back with you on that question. Okay.
Yeah, VITA can help with maybe if you have to tax prior up to what 2018 is the furthest back that they'll go to help actually do taxes, but that's
Yeah,
a question for us to confirm for amended.
I know they can do. I know we can file previous years, but I don't know about amended. So that's something I want to confirm.
Yeah.
That's a great question. Thank you for that question. So we will get back to you on that.
That's good. I like these questions. I gotta increase the knowledge.
Okay, how would you know if you have used the 4-year?
Is this for the education credit or?
For the education credit. So
okay.
if you went to college and claimed it, if you reported you were a student and took advantage, I'm having a hard time wording that. You would know based on yourself filing your taxes, because when you're a student, you get a 1098-T, which is a fancy word to say a statement of your tuition. And so if you took your tuition paperwork to your tax preparer, you most likely claimed it.
I will also say on your original on your 1040, I believe, on your summary, after you do your taxes for previous years, it lets you know which credit you have used. So if you've used the American Opportunity 4 times, every time you're using it, it's on that tax form to say that you've used it. And so that'll kind of keep you updated. Now, just because you've used the particular first education credit that most considered the best one, you still qualify if you're still in school for lifetime learner credit and credit such as that. So just because you've used up your 4-year credit for American Opportunity doesn't mean that you cannot still get credit for being in school. They're just going to calculate it a little bit different and put it into a lifetime learner credit, for example, where it's a different type of portion of the deductible.
And you still qualify for tuition and fees deduction. Outside of American Opportunity and Lifetime Learning, you will still get the tuition and fees deduction, as well as the student interest loan deduction.
Yeah, and the Lifetime Learner doesn't necessarily always have to be to a degree or anything. You could be continuing your learning, and some of those qualify for the Lifetime Learner credit as well too. So hopefully that answers your question.
Oh, we have some questions.
Yes, for the American Opportunity because you had a break in school years. Okay, so maybe we answered that. But if there is a break, it doesn't have. So if you miss a year, you don't technically lose it. But every year that you file for it, it's 4 times. So there can be a break, if that's what you're trying to say, for the American Opportunity credit.
Okay, beautiful. If there are no more questions, I'm going to hand it back over to Denise. Thank you guys for your attention and your engagement. We really appreciate you having us here.